Welcome to Illuminati Silver. We tell the truth about silver. Today is Wednesday, the 9th of March 2022. And we're looking at the extraordinary rise of gold and silver these past few days, and what we may expect in the days ahead. But first, a quick shout out to the video interview we conducted with Josh Saul of the Pure Gold Company last Friday. And we published in two halves, one on Monday and one yesterday, that interview. They're entitled Josh Saul, CEO of the Pure Gold Company, Part 1, Gold and Silver, an asset class advisors ignore, and Part 2 was why silver should be $100 an ounce according to Josh Saul. As mentioned, this was an hour-long interview where Josh shared his thoughts on the precious metal sector in general, and gold and silver in particular, against other asset classes. He highlighted also why this sector has been ignored by financial advisors, and indicates where he believes the prices should stand. Now, we do not necessarily agree that $100 for silver is a reasonable price at the moment, but that said, he's in the industry and this is the view he has expressed. But he's pointing out, really, that the reason it isn't is because in his view, based on tradition, the gold to silver ratio is out of sync. I have to admit, though, that the viewership of these two videos can only be described as poor. In fact, one's beginning to feel embarrassed to interview anyone else. Now, I know we're preaching to the converted as you are listening to this video, but we have to say, come on guys and gals, there are channels out there giving you a load of hype and nonsense and receiving 40,000 plus views, and yet we cannot even get 1,000 views for a serious interview of someone involved in this space, whether you agree with him or not, regardless. I even sent a link to our database, our entire database, directing people to these videos, and yet, really crickets. Very frustrating, very embarrassing, very disconcerting. Nevertheless, we shall still persevere, and I've attached a link to them in the description box below, in case anyone hasn't had an opportunity as yet to listen to them. Meanwhile, this week gold and silver has been on a tear, even rising at one point, certainly as far as gold's concerned, higher than our outlier forecast provided in our update video on Saturday. So let's take a look at what's happened and discuss where we believe prices are going to go from here. Well, let's get straight into the gold price. As we can see, as at 10:38 in the morning, gold is $2,016. It's up $7.74. Now, it's been as high, wait for it, as 2,070 and as low as 2004. Now, if you bear in mind that Friday's close, gold was 1971, it's now 2016. Which is some $45 higher. But as already mentioned, it has been as high. In fact, it was yesterday, although we say today, we mean within the last 24 hours. Yesterday, it went as high as 2070. If we look at silver now, silver's up 1 cent. It's 26.24. But it has been as high as 26.96. And as low as 25.83. Again, if we compare that price with the close on Friday, it was 25.76. So if my maths serves me correctly, that's about 48 cents higher. Performed exceptionally well, although it is coming back right now. Now, if we take a quick look at equities, in the US yesterday, broadly down a quarter to 0.75%. Asia Pacific down. However, Europe, it's recovering, and quite substantially. With the FTSE up 2%, but that's the lowest rise. And the Euro stocks and the DAX up 4.9 and the CAC up 4.73. Now, yesterday, we didn't have time to produce this, but the dollar index was as high as 99.4. And over the last day, 99.1. Yes, we were going to do a video on the dollar index saying, told you, It's fallen back slightly to 98.5. Phenomenal rise in the dollar index. However, what is not good news is what is happening to oil prices. Brent crude is now a phenomenal 126.91. It was $1 higher earlier. And WTI crude is 122. Just imagine, it was not that long ago where we were talking about the potential of sub $20 oil, and now it's 126 and 122. We foresaw it going over 100. We predicted it for some time. Frankly, we thought 110 to 115 would be its peak. But that was until, of course, what's been happening in the Ukraine has hit somewhat of a concerning level. And I'm grossly understating it when I say that. If we look at the news just very briefly, warning Russian oil move will hit UK living costs. I think we're all expecting that because the West has hit Russia with oil bans and gas curbs. And that is going to come at a huge cost. And this is repeated by the BBC in America. If we also take a look at something that's been happening on the nickel exchange and some criticism of the London Metal Exchange, the City of London is the Wild West of metals. And that's got to change if traders are going to trust the LME after the madness of the nickel surge. And this has also to some degree played into the rise in metals generally. Mark Rich, the infamous godfather of the modern commodity trading industry, thought he could squeeze the global metals market at will. It was a time of swashbuckling trading in the City of London. Regulation was lax and traders did as they saw fit. In 1992, he targeted the zinc market, amassing a huge position on the London Metal Exchange. His bet, however, failed with prices plunging 25% in a month. The debacle cost him more than $170 million and ultimately control of his company, which was later renamed Glencore plc, which we're all familiar with. 30 years later, and it's déjà vu. The same hubris, the same lax regulation, all in the same place. The commodities Wild West of the LME. You just need to replace Rich with another self-made metals tycoon, Wang Yuangda, if I've pronounced it correctly, hopefully, and zinc with nickel. On Tuesday, the LME was forced to shut down nickel trading after prices surged 250% in 2 days. Xiang, who controls the world's largest producer of the metal, Tsingshan Holding Group Co., had built up a huge bearish bet. After Russia invaded Ukraine, nickel prices jumped on fears of sanctions. The ensuing regulatory mistakes could lead to potentially billions of dollars in losses and leave the reputation of the world's top metal market in tatters. And a quick diversion to the crypto market. Bitcoin's jumped 8% today, up to 42,000. The market overall is up 6%, and this is for a slightly different reason because it appears Janet Yellen has revealed what Biden is going to produce next week on the crypto regulatory regime. So let's talk a little more now about gold and silver. So gold is currently $2,015-$16 and has been as high as $2,070. And silver is $26.30 and has been as high as $26.96. Now in our weekly update, which we published on Saturday, and if you haven't heard that, we've put a link to that below, we saw gold trading, or we predicted gold trading between 1925 and 2025, with 1900 and 2050 as outliers. Well, it's back within our normal trading range, but it did spike above 2050, albeit by $20 for a very short time. We also saw, or predicted, silver trading between 24.50 and 26, and 24 to 27 as outliers. The outlier range held, as silver did not quite touch $27. And like gold, has fallen back above, though, our normal trading range, but well within our outlier range. So where will the rest of the week lead us? Frankly, it really depends on Russia and the West's reaction to its behavior in the Ukraine. The West are using Poland to supply hardware, and we await Putin's reaction to this. Senior MI6 officials, retired that is, and retired generals predict this conflict is going to continue for some time, because obviously those currently serving are not able to say anything, and hope that rational behaviour ensues so as not to escalate the conflict. The likes of Senator Lindsey Graham in the United States and a few others are calling for even harsher measures against Russia, and potentially an escalation if news reports are to be believed. Our position is that, of course, gold and silver can go to almost any price if this conflict gets out of hand. But if the West holds back militarily, and there's debate whether it should or shouldn't, and allows Putin an exit of some sort, then to some degree the situation may revert back to normal. However, it takes two sides to tango, and at the moment Putin seems determined. Our view for this week is that tensions will remain high, and we may very well see another test of our outlier ranges before the week is out. The one consoling fact we can take from this is that when the world is in conflict, it is to gold primarily and silver secondarily that investors flock towards. And this should never be forgotten by the investor community. What do you think? Where do you see prices going for the rest of the week? Meanwhile, thank you so much for listening. Please, by all means, look at the videos that we've put in the description box. If you haven't already done so, do subscribe to our channel, press the bell sign. Until our next video. Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.